Johnson & Johnson is one of the world's largest healthcare companies. We have it in our international portfolio. It's got divisions focused on pharmaceuticals, medical devices, and consumer healthcare products, as Chantal was mentioning
Yeah,
earlier.
so it's kind of like the big ship in this space. It's the largest by far. We do own it, and it's like a one-stop shop. You get all of that exposure in one entity.
Market cap, $327.8 billion US, price to earning ratio of 22 and a dividend yield of 2.7%. As Paul was quick to point out, we have made money and
Not a
are
lot,
making money.
just a bit.
I don't want to ask you how much, but Chantal, Johnson & Johnson, I think you have endorsed this one before.
Yes, this is a really nice company because it is well diversified. So in terms of what we're talking about today, pharmaceuticals specifically, it has about 45% of revenue exposure there, about 19% in consumer goods and personal care, shampoos and the like, baby products, and then I think it's about 36% in medical devices and artificial knees and elbows and hips and those kinds of things. And it really just is a very well-rounded company, good multinational exposure. It's done pretty well over the last year and year to date, a little bit softer over the last month or so. But the rating still doesn't look that demanding. If you look at it on a forward basis, about 17 times for a quality counter like this, with a nice dividend yield if you consider that it's in the US, actually doesn't look too bad.
Let's look at the share price graph and it'll give us a sense of what is happening here.
So it was a bit of a sleeper there in 2013, 2014, 2015, and people used to ask us, damn, why are you still buying this one? It's boring, it never does anything, it's too big to move the needle, you know, all that kind of stuff. And then in 2016, it really has moved sharply higher.
We have seen, quite a significant move lower there over the last
from about
while.
126, 27 down to the current level of 117. But
let's hope that trend does not continue.
Yeah, and I wouldn't expect it to. It's kind of going with the market, and as you know, the market's been a bit here, there, and everywhere. But just to come back to their core pharma portfolio, because that's what we're trying to talk about here. They've got Concerta, which people that have got kids with attention deficit disorder will know. That's the slow-releasing one as opposed to the other. They've got Xarelto, which is for blood clotting, Zytiga for prostate cancer, that's non-invasive prostate cancer, Risperdal, which is for bipolar disorder, and then Remicade. People have been concerned about Remicade. It's a drug that's used for Crohn's disease and related blood concerns because there's a biosimilar coming to compete and get in the way of that particular one. But that's a great portfolio, and they've got another 4 or 5 or 6 big blockbusters coming through, stuff which is already in either phase 3 trials or has already been approved by the FDA.
So that's the injection of new growth into the portfolio of drugs.
And because they're so big, what they have done from time to time is to buy their way into. So they bought, for example, Janssen Pharmaceuticals a few years ago, which gave them some of these drugs because effectively then they didn't have to go through the invention and the research process.
Paul's got depth and breadth to this discussion.
Yeah, I mean, absolutely. They've got a fantastic drug portfolio, and one of the exciting things about Johnson & Johnson is that the organic growth within that portfolio is expected to be pretty well maintained relative to the peers. And then you also expect some really good new drugs to come on stream to kind of replenish any loss of sales when some new generics or so come to the market. And as Paul mentioned, they have the opportunity to also acquire other businesses and other product lines. They've got about $20 billion on their balance sheet to do that with, which is a pretty tidy sum.
Tidy sum to play around with, I'd say. Can we call this one hot or not on Johnson & Johnson?
I think it's a good starting point for people, and I think you've got to have some pharma and biotech and these kinds of companies. So if you're a little constrained for funds because you can't own everything, it's a great way to get healthcare exposure in one shot.
Do you agree with Paul? Hot?
Absolutely.
Hot?
Yes.